Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. I'm sorry Chelsea's not here. She's a little bit under the weather. I hope she feels better. Today, we look overseas, and you're seeing some mixed, but quiet markets in Asia, and but Europe is up across the board. Maybe because they didn't trade lower on the terrorist attack yesterday. And to update on that, they were two brothers. Two brothers blew themselves up. Those cowardly bastards. Yes, I could say that. It's my show. That's what they are. And there's one still at large. So I guess listen on the TV to see whether they capture him or not. When they capture him, perhaps maybe that'll give the markets also an emotional lift. So once again, yesterday we weren't sure how the markets would respond. And then I remember saying with Chelsea, I'm like, you know what? The DAX was down 1.5% or so, and it's only down 0.5%. So they're trying to, buy the news and stand tall against, the tragic events. So anyway, the DAX is up about 1% today. If you look at the chart of the EWG, you will see that, this trend from the lows has been very strong. I've been trying to draw this for you. And my theme for the day is you can't get too bearish until. And basically, you have the EWG that, held the 8-day yesterday, even with all of what was going on all over the TV sets. And now it's probably going to break above this bull-type flag and make its way towards the 200-day, which we've talked about perhaps being a magnet there. The EWG has come down a long way, since the highs, and now, you've had a big move off the lows, and we are heading into some bigger resistance, so you always want to be a little careful, and realize it, but there is this descending channel right here, so that is your next resistance spot. So you talk about our futures. Our futures are flat. Yesterday they were down 10 handles. So basically I said the same thing. You can't get too bearish until this. Okay, and what was that? Until we break and close below the 8-day moving average, which was at 2,040. And then all of a sudden within a half an hour, the markets were almost already green. So let's go to the SPX. It has had a really, big move since the lows. And it is what it is. Technically, there are a lot of signals along the way to make adjustments. Here's your double bottom, first quick move. That was your short covering move. And then really right here is when it was important. This showed you some commitment to that move off the lows. Then we took out this resistance area. And since then, we've been traveling above the 8-day moving average. So here you are. Here is your 8-day moving average again. So you cannot get too bearish until we break and close below this. And the question is, will we take out this upper flag and make our way back towards, let's pick out this spot, 2100. I think during the course of this process, 1,000 people out of 1,005 people have been more trying to call a top versus saying we're going to take this out. Maybe that's why we continue to go. So you get even a little bit closer here just to, see the prices. Oops, let me get rid of this line. And oops, sorry. And here is that flag. The flag is right here. Yesterday's low is 2,040, and here's your high. And if we get above this and continue to go, there is room. And here is your 8-day moving average that we've been above for the majority of this run. So you look across sectors, and you're seeing a lot of the same thing. It's almost like the salute the flag. That is the title of my morning note today, because that's what a lot of these sectors all look like. They're all holding the 8-day, flagging, and as long as they flag and continue above it, you go for some trades. You look at the Qs. I think the Qs are pretty important today. Look at this chart. You have what is almost a 5-day consolidation. 1, 2, 3, 4, 5, and it's trying to get through here. So for the Qs, I would write down 108.37. We get above that. There's a big gap that I might want to go fill, which is up to 112. And what is it holding? The 8-day moving average. So the theme continues. You can't get too bearish until we break this, which is at 107.16. Then you flip towards the Russell. The Russell is giving you some nice patterns along the way. Yesterday in my note, I'm like, if we hold 108.50, you can't what? I wish I had a co-host here, because then we can go back and forth, and they would say, you can't get too bearish. Well, anyway, you look at the IWM, and you'll see, it had a really nice move since taking out this resistance right here as it held higher. Then it flagged right there, giving you another entry when it got above this little descending channel. And now it's flagging again. So we'll see if there's any more follow through here with the IWMs above this spot. This spot is what? 109.94, and look what we have here, the 200-day. So maybe this gap wants to get filled into the 200-day, and then that could be it. You go into the financials, not acting special, but you can't get too bearish until some of these stocks break support. Look at JP Morgan, for instance. JP Morgan had its big buyback on Friday. Here is your last little bull flag above the prior resistance, and now here you are going sideways again. So you can't get too bearish unless it takes out 59.62, and if it happens to get above this 3-day range, it might want the 200-day right there. So with the market's just kind of grinding higher, there's been a lot of different setups, and each stock has been created different, and each day different. High beta tech, there's been some opportunities here and there. There is some news out there on Google about the cloud wars and how it's starting to step up its initiatives. Here is your upper flag, which you can't get too bearish until this 751 gets taken out, and it seems more like it's trying to get to the upside. It's just having a little problem here with no momentum. So here is your pivot, 765. Yesterday we talked about Amazon. Amazon was a quickie. This one wound up being a good trade for a lot of guys yesterday that could handle Amazon. You had this small red dog reversal on Monday, okay, and then it was downgraded yesterday with the futures also down. And some guys said, I was like, maybe buy it versus this low versus a 200-day and you get a trade. And meanwhile, it went positive first, took out the prior high, and overall chart pattern isn't great, but a tactic's a tactic. And now I guess right here is another one. If Amazon can get above this 562.76, maybe it tries to head back up here. Overall, on the macro, not acting so special. It had that breakout failure up here, which was your sell signal, then your gap down, which gave you follow through, and then hasn't really done much since. A little bit of a move off the lows, trying to hang in there. It's, a whole lot of blah. Netflix is doing the same thing, a whole lot of blah, where you have a little bit of a move off the lows. I thought maybe we'd get a nice trade here above this, and all of a sudden, hit some resistance into that 102 area and hasn't done anything. This stock had an engulfing bar here and it's been in the downtrend ever since, and still, not acting special. So I guess if you take a closer look here on the micro, not really telling you much except for it couldn't really get above resistance. It's above the 8-day. If the market starts to sell off, maybe breaks this 8-day moving average and you try and short it. This trend here, from the lows is still right around there. So this is not doing anything that makes you want to be overly long, but if it were to break this, perhaps you get a little bit of a short. In Tesla land, Tesla has an enormous run, fueled by shorts. You can't even short it. Everyone's like, how do I short Tesla? Thank goodness you haven't been able to get a borrow for the last $15 because you would have been caught like everyone else who's in there, which is why it's hard to borrow. So what did Red Dog do? Red Dog shorted it yesterday, just for the first time in a while. Stocks had a crazy run off the lows. Look at this V bottom. You want to talk about a V? Well, here's your V that thought would be a W, but it wasn't when it took this out. And now look where we are, into some bigger resistance. First down day. I guess if it were to get below yesterday's low of 232, perhaps you could add to a short, and the 8 days all the way down here where it's extended from. Maybe it even doesn't get to there. It tests perhaps a 200-day at 228, so I'm looking for a Q trade here. If it gets above this 238, though, I will be covering it because I'm not playing the same game all the shorts did here. You had a cute short here, and then you had a run for the hills right there. So we'll see what's next. Does it hold here to continue higher, or do you get a little bit of a downside, which would be nice? And then you go to Chinese stock land. BABA's been pretty impressive. BIDU's been okay as well. You take a quick look at BABA. A lot of guys like Sperling has been taking advantage of this move. First thing we talked about that changed the composure was here. Big gap up that held. And what has it been? It's been above the 8 day since. I remember saying here, the same line, can't get too bearish on BABA unless it gets below 70 and closes below it. But anyway, here you are now above the 200-day. And you could use this gap as your support to trade against 76.91. And then at some point, maybe it creates a little bit of a flag, takes this out and continues to fill this gap all the way here. Nice move in BABA, and I remember trading it here to start the year, which wasn't fun. I bought this stock lots of times right here, and then it failed. and we'll see what happens this time around. And let's take a look at the macro chart here, Baba. Macro chart, not a whole lot going on. Let's see if you draw a trend from here. It's coming into maybe the longer term trend. Some people, it's just not a heck of a lot. Just a micro pattern that got ignited here that's heading into some resistance, and we'll see what's next there. BIDU, also since the earnings gap, this is the macro chart. Looking a little better, at least it's above the 200-day. Take a closer look at your BIDU, and you'll see that here was the gap up after earnings, right here. Didn't do much, tried, came back in, and then gave you a nice little red dog reversal right there. Then another red dog reversal here for a little bit of a pullback, and now it's flagging above the 8-day. So if it stays above the 8-day, which it's been trying to do, what can't you be? Too bearish. So a move above this is 189.80, maybe you get another little trade. Then let's talk about BioLand. The bios had a perked up Friday, gave you a move on Monday, and a little bit more action, depending where you look yesterday. But now the IBB is heading right into the 50-day, which could be some support. Some guys that took advantage of this move, like Scotty Chait, got to give him some props. Saw a double bottom here in the IBB, and now it's coming into resistance in this bottom channel. And here is your pivot, which is the 50-day. So maybe it pushes above this to 63.97 and then comes back below it, and you get a red dog reversal for a cute short, or gets above it. And if you look at the bios overall, they've been really battered and bruised. So just don't overly have short in the brain just because it's rallied 3 days. This sector loves to trade in ascending channels. Well, look what happened when it broke that one. Look what happened when it broke that one. Just to give you some reasons and to show you how patterns repeat themselves. And now it's going sideways, and maybe we'll see a better move. Last time it tried to do that, remember we caught it, it was a bear flag and continued lower. This time, didn't have that same kind of result. So with that said, we'll see what happens right around there. Looking at some bios, GILD, I saw it down this morning. Hopefully some traders aren't trapped. It gave you a nice trade here when it broke out, and then yesterday I talked about maybe visiting it while it was down to go negative to positive and went up, and now it's trading around here. So maybe they support the 91. So if you sold it into strength, maybe look here, and if you happen to still be long it because it was acting well, give it 30 minutes. If it, just say it opens at 91 and rallies off it and then comes back and breaks 91, just salvage the trade and move on. Let's see what what does CELG look like? CELG, just coming back up into resistance. What does JUNO look like? More of a beta bio. It's, I guess trying to wedge here. Could get going, lots of resistance right here. It's going to need a lot of volume to get through that. The one that some guys are having success with, like Scotty Chait and some others, is this GWPH. Look at that huge gap up on the news, came in here, held the gap. Some guys got long when it took out this 2-day pivot, then went from red to green and pushed, and I guess the next level you'll be watching to see what it does is here. Holding bios sometimes could be rewarding, but also painful, so it's up to you. Some guys, I think we're trying to also position to some options here to go out a few months just in case, so the risk is premium paid. This stock, I think, has a few more FDA approvals in the pipeline, so you've got to be careful. But overall, here's 120, here's where it's now, and it's moving. Above the 200-day, protected the gap, so, trade at your own risk. VRX, Sperling has been looking at that one. That one, look at this move. My goodness gracious. Just to show you how things change, this was a hot stock, and what was it, above the 8 and 21-day moving average this entire time until what? It broke the trend here. And look at that little head and shoulders top pattern too, to give you some clues. Left shoulder, head, right shoulder, engulfing bar, took out the range, took out the 200-day. What do you do when a stock takes out the 200-day and stays below? What does Red Dog say? I'm talking about myself in third person. Get out of Dodge. That's 200. You wouldn't have been in this friggin' mess. So if you're not in the mess, maybe there's a little, trash for treasures trade. I think I went over the 5-minute chart here, made it a little bit easier yesterday. We talked about how, you had this, bullish type flag, and maybe it can get above, above it, and it gapped above it, came in, and then trended higher. It's up $1. If you're still long it, sell a little bit. But you go back to the daily, and I guess if you're in it, watch Sparling. He trades it pretty well, and your next real level of resistance comes in a little bit closer to 38-ish. But just don't short it because it's up a little bit. This stock's come down a long way, and you're looking to make peanuts, I think, for what you could be steamrolled with. So 32, yeah. So I would say, what's this? This is 33.70, and then this is 35.82. Let's talk about social media real quick. The only stock really that looks decent there is Facebook. Tried to go yesterday, didn't have a lot of power. Maybe today it tries again. As long as it holds, some are trading it as long as it holds this 8-day moving average. And what can't you be? You can't be bearish. If that holds anyway, joke's getting old. So maybe today it tries to get above this 112.88 and extends a little bit better than yesterday. Here is the prior high. It's been acting well. You could draw a new ascending channel here. Remember when this one broke, gave you a small little down move. At this point, this is still in play, and we'll see if it can continue. Not sure if I went over Apple, but Apple, still acting pretty well. They couldn't sell it on event day, so that told me maybe it could be a long, and yesterday went from red to green, and what's it doing? Oh, holding the 8-day. What a quinky dink. This is when it first woke up. Here's when it held support. This one Red Dog put the chart in there, and now look where it is. So we'll see if it can take this out and make its way back to the 200-day, which should be pretty significant resistance. Overall, hasn't really been acting special for a while, but if you sold it here when this ascending channel broke or when it back up below the 200-day, maybe you got back involved near the lows, as remember how we talked about 92 is really important? Well, 92 held, and now here we are. Let me discuss the metals. Yesterday, the GLDs were up 80 cents, and Chelsea said something very smart. She said, maybe, if they can't hold this up, it's telling you how the metals are still a little overbought and need to come in, and they faded yesterday. So if the metals didn't go up on a crazy terrorist attack bombing, I think some people are selling it thinking that it's not that strong. So, you will see what's next. Overall, the GLDs, are trying to hold the 8-day, and actually no, it's below the 8-day, the 21-day. So you'll see what happens here. Again, it failed in resistance, gave you that Pone Day on the Fed dovishness, and now it's still hanging around. But I would just be a little bit careful here, probably both ways. This stock's been above the 8-day moving average pretty much since right around here, or this ETF, GLD, and now it's starting to turn lower, and this is starting to flatten, so it's showing you some momentum is waning. So in closing, what was my theme? You can't get too bearish if, okay, and that's it's different for some sectors and some stocks, but until we break the 8-day moving average with some force, try and be opportunistic. At least there are some flags to maybe trade versus support and get some continuation. I know volume's light, so don't overtrade. I also know that the blackout period is going to start March 28th. What does that mean? It means that corporate buybacks will start to decrease, which has been a big driving force for higher prices. And then you also have the quarter ending, so maybe they want to do a little bit of shenanigans so they don't look so bad in the end of the corner, and then some of the forces that are holding things up start to give way, so perhaps we get a little bit more volatility in April. But again, until then, can't get too bearish if. Have a good day. I'll see you at the recap.